Hi everyone, my name is Sabapathy Narayanan. I'm having a series of conversations with experts in the payment domain. These conversations allow us to understand where this industry is heading towards and some of the interesting trends that we should look at and be aware of. Today we have with us Jagannath Panigrahi, who is an expert in this domain, who focuses on cashless employee benefits. He's currently working with an organization called Zeta. This includes employee tax benefits, corporate gifting, and rewards and recognition. Jagan, thank you for being a part of this show.
Thank you for having me.
Welcome. Yeah, all right, great. So, Jagan, just to set the context and take this forward, I mean, when we talk about employee benefits,
Yeah,
so what is the market size that we are talking about?
sure. So I think we need to start, before answering the question, we need to know what is the definition of employee benefits.
Mhm.
So it covers a lot of things, such as even your paid leaves is a part of employee benefits, right?
Mhm.
Your post-retirement benefits are a part of your employee benefits, right? And the aspect that I work on, or the aspect that we are focused on in today's discussion, is the is the kind of benefits that are non-monetary in value. Okay,
Mhm.
such as meal coupons or food vouchers and other kinds of such tax-saving benefits are the space that we are talking about. So the size of this market is roughly about 3.5 to 4 billion in India,
Mhm. Mhm.
and this is in terms of the payout volume that you can do. And if you look at in terms of the number of users who can be addressed, I think it's in the order of somewhere around 10 million users you can address or you can reach out to.
Mhm.
But that's not where we are. I think where we are is just about, say, 30 lakhs of users is what we have reached out to as an industry. Okay, so if we see that, that's just, say, 30-35% of the total addressable market.
Mhm.
But then, just to give you a comparison, if I take all of these elements and put together, which is the meal voucher or the post-retirement benefits, the paid leaves, and all of these things, and if
Mhm.
I had to give a number to this, then this number comes somewhere to the order of around 40 billion for the entire world.
Entire world, is it? Okay, all right. So if you leave out the pensioners and stuff like that, only for the food coupons, what would be the market all over the world?
I think we can take that as in the order of about 35 to 40% of the total value.
All right.
That would be a rough estimate. So that'll come to somewhere around, say, 15 odd billion should
Yeah,
be the.
that still is a large addressable market. Yeah. All right. So so now that people are moving away from this traditional benefits to cashless and all that. Okay.
Yeah.
So as you said, you are addressing about 30% of the market, 30-35% of the market. Is that the only addressable market, or there are a lot of people who are still who will fall under the unaddressed segments or underserved segments?
Uh, okay. So in terms of addressable market, again, we need to look at from this perspective that most of these employee benefit solutions are B2B2C in nature. Okay.
Hmm.
So from that perspective, the ultimate population set that you can have is the total number of people who have salaried jobs per
Mm.
se.
Right.
So that's what we are looking at.
Mhm.
Uh, can you please ask your question once again as to
And so what
what
I'm
were
trying to find out is, I mean, you said that the addressable market is about 10 million, okay, of which you do about
you?
35% of it.
Yes.
Okay. So is that the only addressable market that's available, or there's a lot of people who are still underserved or unaddressed?
Got it. Okay. Yeah, yes. So certainly a lot of people are unaddressed at this point in time. And the reason for that is, or there's probably a transition phase. So let's say that until 2016 or until even 2017, let's say, the thing was the way in which these employee benefits were offered were not entirely digitized or were not digitized at all.
Mhm.
So therefore, so what happened, what used to happen is the cost of offering these benefits to the employee was more than the value of the benefit in itself for a lot of organizations. Right. So a lot of organizations used to
Okay.
shy away from giving these benefits. Okay.
Mhm.
So with that said, this segment is still considered as a addressable market,
Mhm.
but then they are not on board yet because they see these things as a disadvantage to offering these benefits. Okay, but then now with the changing regulations and with the changing technology that we have, a lot of corporates do onboard, and they are willing to offer these solutions to the employee because employee satisfaction is one of the KRs that they have on their charter.
Mhm.
So in that way, this addressable market is set to grow, and the penetration of employee benefits as an offering within this addressable market also is set to grow, and it is growing.
Okay, all right. So you were mentioning about the cost of offering these benefits
Yes,
outweighed the actual benefits, right?
yes,
So,
yes.
how is that being addressed now with this cashless thing?
So let's take one example.
Mhm.
Let's see the way these food vouchers used to be issued, say 4 or 5 years ago, versus the way they are being done now. Okay, so about 4 or 5 years ago, we used to get these paper booklets, right, or paper vouchers, and we used to spend those.
Mm.
Now you can imagine the cost that the company incurs in to print these papers, to ship these papers to respective corporates or to respective employees' homes, and all of those. So there's a lot of operational overhead over here, right? When you go for a paper-based meal voucher concept,
Mhm.
okay. But then if you see today, the same paper vouchers are digitized in nature, and therefore you get a prepaid card. So there's just a one-time investment that you do in printing those cards, and the cost of printing a card comes to somewhere around 30-40 rupees,
Mhm.
right? But then once that's done, since these are essentially GPR cards, or since these are essentially reloadable cards,
Mhm.
you have to just issue the money again and again, for which the infra is set. The infra is or the
Right.
variable cost is set. The variable cost is not on the higher side.
Okay. All right. Right. In order for you to give away these benefits, employee benefits, do you in turn work with a bank?
Got it. So the issuers of these meal vouchers,
Mhm.
they have to work with banks end of the day any which ways, because the money that's involved in this whole business model has to reside in some account, in some bank account, and in that perspective, a bank does get involved. Okay, but the various income streams that a bank can get through this business model, or the level of involvement that a bank might have in the business model, really depends on the license that the issuer has.
Mhm.
Okay, so broadly, let's consider two cases. Case one is where the issuer itself has the license to operate a prepaid bin.
Mhm. Mhm.
Okay, and case two is a scenario wherein the issuer does not have the license to have a prepaid bin under this issuer's name. Instead, they'll have to get the bin under a bank's name, and these guys can be the operational arm.
Mhm. Mhm.
Okay. So let's take the first case. In the first case, what happens is, since the bin belongs to them,
Mhm.
everything, like, let's say if there is a case of interchange revenue and things like that, all of these things flows back to the issuer itself.
Mhm.
But then this money in itself has to reside in some bank account. So that could be
Right.
some current account or some nodal account in some bank.
Mhm.
Okay, and for a bank, it's beneficial because they get a large corporate account and they can get second order benefits from this, such as maybe they can lend out this money to somebody else tomorrow and things like that,
Right.
right? Against this value.
Mhm.
Now, if we come to the second scenario, wherein the prepaid bin is licensed to the bank and the issuer is only acting um, as an operational arm to this whole business model, then in that case, yes, what happens is the bank, or the interchange revenue itself that flows into the bank's account, there will be a commercial agreement between the issuer and the bank. So
Okay.
now the bank anyway has a second order benefit, that's anyway a given, but it
Mhm.
also has direct benefits such as getting a share of the interchange revenue, and there are other modes of levying or getting revenue, such as if you levy fees and penalties and things like that, then that's another income source as well. So there are different kinds of fees, such as inactivity fee. If you have not used your card for a period of 6 months, then there's a charge levied to it, right? Then there's insufficient fee.
Mhm.
If you try to buy something that's worth 80 rupees, but if you have only 50 rupees in your account,
Mhm.
then maybe a charge of 5 rupees or so something can be levied.
Mhm.
So in this way, different fees and charges also act as a revenue mechanism for the banks, which, and in turn there's going to be a profit sharing model between the issuer and the bank.
Okay, so and who are these typical issuers, Jagan? So
Okay.
when you say that issuers without a bin and with a bin, so who are these
Yeah.
typical issuers? So
Okay. So in India, I think the largest issuer and the most well-known issuer is Sodexo.
okay.
Okay. Few other people use or used to use those ticket cards. Okay, and that belongs to another company called Eden Red.
Mhm.
Okay, Eden Red is another popular company in Europe, as in they have some strong footholds in some of the countries in Europe.
Mhm.
But in India, it's largely Sodexo, and then there are some smaller players such as Neo and a few other such players. But all of them put together might not exceed 10%.
Mhm.
Sodexo pretty much has the entire market in India. If we speak about markets outside India, then, like I said, at least Sodexo and Edenred are the top two leading players. And
Mhm.
there's another group called the Up Group, so they are another player as well.
All right. So do these
These are
banks?
the known ones. These are the known ones, but each geography has local players as well. Such
All
as
right.
in Brazil, we have Alelo, Deligo, and things like that. So,
Mhm. All right. So there are a lot of local players in addition to the global ones like this,
yes,
right? So okay.
yes.
So when you work with these banks, right? So do these banks find this business lucrative enough for them to have an interest in this?
Uh, So I certainly would say that to the banks, they should be saying yes, or they have no reason to say no, because any investment that's required, or most of the investment that's required to make this program happen, is usually not borne by the bank in itself. It's either by the issuer or it's by another technology player that offers this infra to the issuer. Okay, so to the bank, in a way, they free ride this whole thing. Okay, and but having said that, this revenue is certainly not a large fraction of the total, or all the possible revenue streams that a bank has. This revenue stream contributes to only a very small fraction, or to a very small proportion.
But however, since they don't have to do anything specifically for this, so there shouldn't be a reason for them to say no to it. Yeah, that makes sense, because a lot of places where, where there is a low value transaction, banks typically don't get involved.
Yes.
Okay, because as you were rightly mentioning earlier, that the cost of provisioning, servicing such customers is typically higher than the value that is involved in the transaction itself. Since here most of those things are handled by the issuer, probably it makes sense for the banks to do it. So the moment it gets into a cashless, so I'm assuming that it will be in the form of a prepaid card or something like that, right?
Yeah,
so
yeah. Usually.
Are there any restrictions in terms of where they can use those prepaid cards?
Yes. So I think these restrictions are primarily twofold in nature. Okay. The first fold are the regulatory restrictions that we have. Okay, and the second kinds of restrictions are the kind of restrictions that you locally want to impose, but from a regulatory standpoint, you need not. So let me cover both aspects. Let's say that the meal vouchers, right? So by law, one needs to ensure that the kind of transactions that happen from these prepaid cards are only spent towards meal purposes.
Okay. All right.
Now, one way to do this is by imposing restrictions at an MCC level, or at an MID level, or at a merchant ID level, essentially, right? So this is what basically you can do as a prepaid card. Okay, so again, there are a couple of ways to look at this. If your card is operating on a scheme such as RuPay or MasterCard or Visa, then you have the list of MCCs or the MIDs basis which you can block them. Or there are other players, or there are other scenarios wherein these issuers, they create their own proprietary network. Okay, and they don't really work on a scheme. In which case, you have onboarded the merchants, so you know which merchants you can allow, which merchants you cannot allow, in case you're catering to more than one kinds of businesses. But if you're only focused on meal, then any which ways, whatever network you create is a network where you allow the cards to be spent at.
Okay.
So that's from a regulatory perspective. The second order restrictions are more like transaction policies. Okay, and these are left to individual companies' interpretation. So let me give an example of that. It is said that for a given month, the maximum that an employee should be given as part of this food vouchers is around 2,200 rupees. The reason being, it's 50 rupees per day is the fair assumption of your per meal value. And during your office hours, you're going to consume 2 meals a day. Okay, so that makes it 100 rupees per day. And in a given month, there are on average about 22 working days. Right, so that makes it 2,200, 22 into 100. So what companies do is, there are some companies who upfront pay 2,200 rupees, and they tell their employees that you can spend however you wish to within these boundaries, which is the food-related FCC boundaries. But there are a few other companies who want to, just to be on the safer side, they want to comply as much as they can with the law. So what this says, you can spend 2,200 at a maximum on a given month, that's for sure. But you'll also ensure that you're not able to spend more than 50 in a single transaction, or you're not able to spend more than 100 in a single day. Okay, so from that perspective, there are some transaction policies in terms of what is the maximum or minimum spend that you can do in terms of transaction count, in terms of transaction volume, and you can measure that at a per transaction level, or at a daily level, or at a monthly level, in which ways. So these kind of restrictions, which we can, I think, more appropriately call them as transaction policies, these are flexible restrictions which the companies can choose to employ or not employ. But of course, the superseding restrictions are the MCC restrictions or the regulatory restrictions.
Okay, all right. So this is the second order restrictions, right? So that is something that you may or may not have to impose.
Yes.
All right. So that's very interesting. So is there a lot of uptake for these kind of benefits from organizations?
Sure. So I think again this depends from geography to geography, and there is a macro factor to it as well. The reason why I say it is from geography to geography is because in India, I think in February 2018 or so, it was mandated that food vouchers can no longer be offered in a paper form.
Okay.
Okay. So from a compliance perspective, if you have to offer a food voucher, you'll have to do it digitally. That was the ask in the Indian jurisdiction. So as a result, the uptake naturally increased.
Okay.
Okay. So today, whoever has a meal voucher has it in a digitized form for sure. Although the issuer can be different, the technology player can be different, but it's digitized for sure.
Okay. Okay.
But if to get a more realistic picture, I think this statistic would help. Edenred as a company which has most of its strong footholds in the European market and partly in the South American market, I think in 2016 or so, the total volume of issuance or payouts that they used to do, 75% of that issuance was digital by 2016. And in the last 4 years, I think that number has increased from 75% to 85%.
Okay.
Increase over the period of 4 years, and we know that the market that is there today in terms of size is 40 billion if I include the whole thing. But even if I exclude other kinds of benefits, then and if I choose only to focus on meal benefits, it's still in the order of 15-20 billion, that order. And Edenred, we should also see that Edenred is not only in the meal space; it offers a lot of or it offers benefits in a lot of other business segments too. So that way, I think. There's a fairly high uptake in terms of that, right? And also this market is growing at a rate of 5 to 6% year on year. And I think largely what's driving the adoption of this are two things. From the perspective of customers, when you give them a digital solution, it's just easier for them to handle things, and the cost of offering the benefit in itself is reduced to a great extent. Okay. An example of that is what I said earlier, which is the operational overhead that one would have to undertake if one has to issue paper vouchers versus issue prepaid cards. The second factor that has strongly driven for the adoption of this from a user perspective is the internet penetration in general and the smartphone adoption in general by users.
Okay.
So if you look at from a smartphone perception, today in India, around 500 million people have or they own a smartphone. Okay, but then only 10 million users are salaried in nature.
Right.
Okay. So, yeah.
That's a huge mismatch. Yeah.
Yeah. So the infrastructure that's required to conduct these payments are there. So there is no barrier from that perspective. All we need are some macro factors to align so that this uptake only keeps increasing and not decreasing.
Okay. So what are the form factors that exist today when it comes to these employee benefits?
Sure. So I think the most common form factors that we have, the most common form factor, in fact, of everything is the prepaid card. I would say that the second most common form factor is either a QR code or a barcode. They essentially work in similar ways. And peer-to-peer also is a form factor, but it's not as popular as the first two. Okay, but now from cards in itself, again, there are various second order form factors, such as if you tokenize your card, then your mobile becomes a form factor in itself.
Right.
So that's there. But yeah, to answer your question, I think cards and QR codes, these are the widely used form factors to make these payments happen.
Okay. All right. So I mean, how does this QR thing work now? So can you just take me through that?
Sure. So again, a QR code can either be presented by the merchant for the user to scan, or it can be presented by the user for the merchant to scan.
Okay.
So I think the more common form of payment or finding the QR code based payment is where a merchant presents a QR code.
Okay.
So the easiest implementation is a merchant has a static QR code. Okay, so he typically takes a printout of that QR code and sticks it somewhere on his shop. And that QR code is going to contain some basic information such as the merchant ID, the terminal ID, and things like that, right? And then maybe the counter value and things like that. So some essentially 3-4 parameters that helps the payment processor to identify who the merchant is in the system. The user then scans this QR code. The moment he scans, essentially this information is pulled out from the QR code. Then the user keys in the amount that is to be transacted, and then the user clicks on the pay button, in which case this request is made to the backend server. The backend server then makes its own necessary checks and validations to see if this transaction can be authorized or not. And if it is authorized, then both the merchant and the user, they get a payment confirmation.
Right. So it doesn't really differ from the normal QR code payments.
No, not much. Yeah.
It doesn't really.
It's the same thing.
Yeah. So that's
because that this operates in a closed loop setup. So therefore these QR codes could be proprietary in nature. So a QR code that's provided by Sodexo, you can't expect it to work like a Bharat QR code and work anywhere else.
Okay, all right. So it has to work in only participating merchants.
Yes.
Right? So,
Yes.
okay.
That will be the restriction.
Yeah, so that makes sense. So, do these employees know which are the participating merchants for all of this, or do they also keep something like we accept meal vouchers or?
Got it. So I think in India we don't find this much, but in European markets, as far as I've seen, this is a common practice. Whatever modes of payment that they accept, they indicate it on the shop for sure. They also indicate it on different kinds of payment apps as well, not just the payment app provided by this issuer, but by any other generic B2C payment app as well. Specifically, if we talk about India and if we talk about say Sodexo per se, then there's this concept called merchant directory, wherein you can see the list of merchants who are affiliated to this network, and thereby you can figure that out. So that's in terms of for a user to figure out if he wants to do an in-store payment, and if a user wants to do an e-commerce kind of a payment or an online payment, then on the payment page, you know that there are various payment modes that are listed out, right? You can use a Visa, Master, debit card, or you can use UPI, you can use net banking, things like that. Similarly, you also have a section where they say that you can use your Sodexo card or whatever is the issuer's card. So in that case, you are notified there as well that you can use this.
All right. So I have one very, very basic question. So you said that up to 2,200 rupees can be loaded on your card as employee benefit. So how many people actually use it fully within the month?
Okay.
What percentage of people? Yeah, basically. So.
Sure. So to answer this question in short, yes, I think the direction in which you're going is right. Not all the money that's issued in a month is being spent in that month. Okay? But this is also again largely driven by the company specific policy.
Okay.
So again, let's consider two cases. So there are companies wherein what happens is, I give you 2,200 at the starting of the month. You're free to use any which ways. Okay, either you can use the entire money in this month on the first day of the month in itself, or you can use only 50, right?
Okay.
And at the end of the month, if there is some amount remaining, then I'll lapse it. Okay, there are companies of that kind or who impose restrictions of this kind. And then there are other companies wherein such restrictions are not imposed.
Okay.
Okay. So they let you carry over the money from this month to the next month. Okay. So let's say that this becomes even more interesting when we are speaking in a post-COVID time zone. Because in a post-COVID time zone, your in-store payments have come down drastically.
Right.
Okay. And you can only make this spends using an e-commerce route. Okay. Today, if you take a Sodexo card, okay, let's see where all you can use. You're not going outside. So physically swiping the card is, let's ignore that part, or it's pretty much not there. All you can do is card not present transactions, which means only e-commerce transactions. From a food perspective, I think there are two major kinds of transactions you would do. One, you would buy cooked food. Two, you would buy raw food. So for raw food, let's consider Big Basket, for example. For cooked food, let's say you would buy your food from Zomato or Swiggy or something of that kind, right? Out of these two things, again, Big Basket has stopped accepting physical cards for the time being because they want to reduce contact as much as possible.
Okay.
And the way Sodexo cards work with Big Basket is, although you can indicate that you want to pay with a Sodexo card, but you can't pay online. Instead, the guy gets his own POS device while he delivers the goods to you physically at your place, and that's when he swipes the Sodexo card. Okay, and you've disabled that option. So Big Basket also is gone. Okay, only on Swiggy spending 2,200 is not something that most people do. Okay, so that way that money does get carried over, and you can spend it at any point in time. The ultimate expiry to all of this mail money that you get is 3 years from the date of issuance.
Okay, all right. So that's a lot of time. Yeah, sure.
Yeah, so you can spend the money anytime by then. But for now, this is how the scenario looks like. Because typically a lot of payments earlier used to come from companies, cafeteria, and things like that, which is again an in-store form of payment, and all those forms of payment are cut down for now.
All right. All right.
To the extent at least.
Okay. So is there anything else that you want to add to this discussion, Jagan?
I think only I think that the whole concept of invisible payments is only getting stronger and stronger, and there will be a day when even the form factor things, or basically you shouldn't be realizing that you're using this as a form factor to make a payment. It should be as simple as that, and that's where the entire fintech industry is moving towards. So it'll be an interesting time to see how payments in general, including the meal payments, would work for you when you reach that stage where payments are truly invisible. Such as one simple example is when you save a card in India versus when you save a card in the Europe. In India, if I have to make a subsequent transaction on this card, I'll still have to give my CVV number, right? So on Amazon,
Right.
you have saved your cards. If you still want to do a transaction tomorrow, you'll still have to give your CVV number.
Right.
But then, the regulations in Europe, the PSD regulations in Europe don't direct for that. Okay, in Europe, if you save a card, you need not give your CVV at all. You can just give a transaction amount, and the call is directly made to the backend or to the issuer's server to make the authorization happen. So,
Right.
so that way you don't feel the transaction happening. A good example of that is, say, Netflix subscription or a Apple app subscription. You don't realize the payment happening, right? You just get a notification to it. So
Right.
it's
That's true.
extremely frictionless.
Yeah. So every time you think about, unsubscribing and all that, before you realize it, it's subscribed.
That is true.
So there's a lot of predictability for the organizations as well, right?
Yes.
So yeah,
Yes.
that makes sense. So thank you so much, Jagan, for spending this time with us. Okay, so we'll have this uploaded as a video, and we'll also share with you the link. And is there a way that people can reach you?
Certainly. So I think people can reach to me via my email, which is jaganpani@gmail.com. It's JAGANPANI@gmail.com.
I'll also add your email ID to the comments section so that
You
if
can also
anybody
reach me
wants.
via LinkedIn. So,
Sure. All right.
yeah.
I'll give your
LinkedIn
LinkedIn.
also is the same. It's linkedin.in/Jaganpani.
All right. That's pretty interesting. All right. Thank you so much, Jagan. Thank you so much for spending time with us.
Thank you, sir.